just
This
understand.
conference will now be recorded.
Oh, sorry. Um, the first and foremost is understanding the impact and what that impact has on cash flow, and really taking a look at those two key components and priorities of maximize cash, liquidation management, and then how are we going to maintain the cost controls. What are the cash outflows and the cash inflows? I'm going to get into that. And I think, Brian, if I'm was notified correctly, that everybody received a copy of a cash flow template that we had sent over. And I'll kind of be going through some components of that as well. But again, I know at the top there, Brian, you had mentioned, cash is king, and it truly is. It is like the oxygen in your business. And first and foremost is really just moving towards preparing that cash flow forecast. Again, with the
Sorry,
goal in mind is we want to be.
can I just interrupt you for a second? Some are saying that they're struggling to see your screen. Now, I see your screen. They've asked, is your video on as well?
Maybe not. Hold on. Let me just
see if that makes a difference.
Okay, video is up and running. Sorry, folks, if you can't see my screen. I'm not too sure how to troubleshoot this, Brian.
So I've got your screen, and of course, me being the forgetful person that I am, we didn't start recording right at the beginning, but we did start recording on your part, and we will we will post this on the website here. So there will be a video of your presentation for those that are struggling a bit. So I'm getting a lot of chat in the screen there, or in the chat piece. So looks like you're good to go, Jory. So sorry for interrupting. Carry on.
No problems at all. And maybe what I'll try to do is just speak to some of the points a little bit more, so people that can't see the screen will still have an idea of what I'm going through. So just to pick back up again, really relating to the cash flow forecast and the timing of all, the cash inflows and outflows coming into your business. And like I mentioned, we had sent out a cash flow template. It's a 13-week cash flow template, but you can really stretch it out to as far as you want. Here we recommend that you do a cash flow for at least the next 3 months, but maybe even into the end of the fiscal year, or to the end of 2020 would probably be a good idea as well. Really, again, the whole purpose of a cash flow forecast is really to understand, when you take a look at those sales projections, when you take a look at your assumptions around when you're going to collect your AR, is that you can kind of see points in time in your business where cash might be coming tight. And then that's going to allow you to kind of put together a strategy or a plan, whether that's going for, cash injection through government programs, or through, putting it in through the shareholders, things like that. Maximizing your line of credit. I'll get into those a little bit more, but I'm just trying to. So I just kind of put a list here of just some of the things that you might see in a cash flow forecast or cash flow projection. Some of the different incoming cash items, anticipated sales, like I mentioned, investor contributions, new loans, and I know, Dylan or someone else might talk a little bit more about some of the loans that are available now. There is, that $40,000 loan. There is some working capital loans going through the BDC. Even your home bank might be willing to work with you on providing some more cash injection if possible. Just keep in mind, what I've seen, even though there is, some opportunities out there to get some loans, they're still asking for some requirements around getting those. So again, a cash flow forecast has almost been, a requirement for every client that I've worked with. They're going to get some new loans, or, extending some lines of credit and things like that. So cash flow may be a bit of a business plan or a response plan to COVID, and they want to kind of see how you're going to come out of it. Refunds, again, business programs. And you on the right hand side here, some of the outgoing cash, obviously some of the biggest ones that happen, obviously usually every 2 weeks or 2 times a month at least, is wages. Obviously taking a look at your suppliers, your AP, and what are your payments looking like to them? What are the terms, or what are you able to stretch out if you can? Rent is another one that comes out usually monthly. I know a lot of folks have been looking and talking with their landlords around, or with their banks around, deferring some of those rent payments, some of the other taxes, loan payments, and things like that you'll see at the bottom. But essentially, going through that 13-week cash flow template, or going through, whatever tool you're using. And there is a few, offline, if anybody's curious, there is quite a few online and cloud-based cash flow templates out there and projection tools, and some of them plug directly into your accounting software. So there is some good tools out there as well that could probably make your life a little bit more efficient. But essentially what we're trying to do is really just, get those sales projections as accurate as we can. And going back to what Troy said, really just having those conversations with your customers. I'm trying to get a sense of timelines. If your projects are secured, but there might just be some changes, I would just inquire about what some of the payment or AR scenarios might look like. And really the thought process is just getting every single payment or every single cash outflow that you suspect that your business is going to incur down in this template. And really, when it comes to the best, worst, and most likely case scenario, I would just some of the main assumptions you're working with when you're dealing with a cash flow template are going to be your sales projections. So that's your, in any type of forecast or projection, I used to always laugh. Someone said the only thing that's certain is that it's not going to be right. And so really, trying to, let's just say, you have some tentative, or you have some contracts, or you have some work in place, maybe put a probability to that just in case it doesn't go through. So maybe your AR, assumptions, you expect you're going to collect cash in, let's just say 30 days at your best case scenario, and maybe do 45 as your worst case, or maybe 65 as your worst case, just so you can have a couple different scenarios. So as you see things in reality starting to play out, if it starts to go one way or the other, you'll kind of have a strategy or a plan, in case whatever way happens. So again, you should have that template. If not, just please reach out to me. And if you have any questions about it, don't hesitate. Another thing that we're really recommending, and again, this is, it's really due to the particular position you or your company may be in, but I've been recommending that people are updating their cash flow forecasts daily, especially during these times or during the situation, and depending on the size of the projects that you're doing. If you're on a longer project, if your projects tend to be a month or longer, a little bit more consistency, it could probably change that strategy, versus if you're used to doing a couple jobs a day or smaller jobs that last only a few days. It's really about trying to reconcile and try to get those cash flow updates every day if possible. Again, and this is so you can make timely changes and just be more proactive. And for me, that's one of the things that I would highly recommend the most, is just, if you can put these in daily, and then you can analyze what changes they had, basically a variance report of here's what we predicted, here's what actually happened. And then taking a look at those variances, it should be able to provide you some sort of roadmap in terms of, if you have to go towards your worst case strategy, your most likely, or your best case. So, and then obviously the biggest thing would just be here is mitigating that potential for surprises. So, obviously, if you rely, for example, on a loan, again, sometimes when you are dealing with banks, or you're dealing with the government, and again, with the wage subsidy, for example, even if you apply for it, there are a lot of cases it's six weeks. Sometimes people are predicting 8 weeks out until that cash flow will actually start coming into your business. So again, it's just having some conservative approaches, and maybe some some more optimistic approach to that as well. So I won't spend too much time on secure your key customers, because I know Troy spent some time talking to this, but really, again, it's just having that open line of communication with your customers, ensuring that their projects aren't being canceled, deferred, or is there anything that you guys need to do to diversify where possible, to go in, if a certain area of your business, let's just say home renovations, for example, if some of your customers are a little bit uneasy about folks coming to their houses, during this time and things like that. Is there any way that you can pivot, or maybe, in more commercial setting, or, new construction and things like that? So again, this is more of a sales and a revenue strategy, but, and there is an example here, because I did want to make a point to say that there is, a lot of folks, I think, that operate a certain way, and what COVID and what some of the measures that the government has put in place has kind of forced people to move more digital, to move online, to do some of the mission critical processes within their business. So again, it's just, what are your customers' needs and wants? What are your ability to serve some of your customers, and what can we do to actually make their lives easier? And maybe that's to do something more on the digital end of things. So just moving on again, not to beat a dead horse here, but the whole purpose, I think, is really to maximize that cash. And some of you, again, I know might be in a better cash position than others, but again, there is some areas that I think you can do to maximize that cash, even if it's not necessarily mission critical right now. But again, I know quite a few people that I've talked to have had some pretty positive responses with either getting an extension or getting a raise in their line of credit, or some of those folks that have actually pulled their line of credit to the max so that they have that cash available, depending on what happens with their lenders or banks. And again, it's having a discussion with ownership group to really take a look out at that forecast to see where you're going to fall in line. Again, you might not have any cash shortages today or next week or next month, but given where we're at right now, what is your July, August, September? What are those months looking like? And if you're starting to see through your forecast that you might start to draw down or get into the danger zone of a cash flow challenge, then I'd highly suggest kind of getting that ball rolling sooner than later. And obviously, if you do, go down the route of lending or injecting more cash into your business, there's always ways after the fact, if you don't need it, that you can move in another direction on that. So again, I think most of you have probably walked down this path, talking to your lenders, whether it's deferring principal payments, some of the covenants that you might have been held to in the past, maybe around, inventory, AR, debt service, current ratios, some of the other things that bankers are looking at, in terms of judging your viability. Again, excess cash sweeps, if you do have free cash flow, or your bank's assuming that you're supposed to be, putting that towards debt, or instead of, maybe, owner withdrawals or things like that. So again, just having a conversation with lenders, I always think is a really good idea. Bankers, like anybody, don't like surprises. And I found in my experience, the more that you're able to communicate and give them a heads up and keep them in the loop, the more they're willing to work with you. And again, I know that does depend on your banker and whatnot. So, and again, like, whether you think you need it or not, I think it's a good idea to at least, have the conversation. In some cases, just get the ball rolling or get approval, just in case that something does happen, that you don't have to start from square one on that. Again, this is going back to, won't spend too much time here as well, because I know Troy had spent some time on it, but really securing that supply chain, and that can really come into effect in a couple different ways. And obviously the first priority is keeping your business running. So who are your key suppliers? I know Troy alluded to, whether it's, you can't get your supplies, it's going to take longer, you can only get half orders. I know, this has been the case with some of the clients I've worked with in the oil field service industry, where, they can't get steel, or some of the things that might be originating from China, or some of the other, places around the world that are having issues with their supply chain or factories or producing and things like that. So again, trying to be thoughtful around, securing that supply chain, securing those materials based on, the projects you have coming up. And going back to what Troy said, I would just really recommend, again, trying to be very diligent with your purchasing and your costs around supplies and materials. And again, when you come to taking a look at your inventory, maybe there's some areas within that as well, that you could liquidate, whether that is by, maybe reaching out to some competitors that might be looking for some of the products that you have an abundance of that can result in some cash for you. Or again, I'm not too sure. I've been trying to look at what some of the, auctions and things like that might be looking at as some ways that you can do that. I know that's a little bit beyond supply chain, but again, really just trying to take a look at those mission critical materials, some of the things that you have in inventory, and really, securing those supply chain relationships. Again, I'm sure you'll know, like from a cash flow perspective, really the thought is we want to collect our AR as soon as possible, but we also want to try to extend or push back payables as far as you can. And I know that's a delicate strategy because you don't want to piss your suppliers off, but you do want to keep cash within your business as long as possible. So again, just to recommend just really reaching out to those contractors, those vendors, other suppliers that you have in your business. Try to work with them on a term or renegotiate. I think this is something that I think everybody's willing to have the conversation now. Some might not be interested in it, and as you see, you might say no, they're having the same issues more or less probably than you are around cash flow and payables and trying to get paid quickly. But having the conversation never hurts, and some of the things that I've heard around the grapevine is people have been pretty flexible as long as you're talking with them, and maybe it's not paying the full amount in the first 30 days. It might be, what, I owe you $50,000 normally, within our contract, I'm supposed to pay you within 30 days. Maybe we say, what, can I pay you 10 grand a month in the next 5 months? So just again, trying to negotiate some terms that might be a little bit more cash savvy for yourself. Again, this is a time where I think, we're willing to negotiate, and some of your suppliers might be having just as a hard a time as some of you may be having during this pandemic. So again, this is, whether it's negotiating prices, trying to negotiate terms, being flexible with payments, again, and really trying to do a rating system based on your suppliers through your payables and taking a look at that AP schedule, and really again taking a look at your mission critical processes and materials and activities, and really trying to prioritize those with the suppliers that you absolutely need to operate, and again, not trying to walk down the line of getting your accounts put on hold or locked or things like that that might affect the way that you can execute a job. So I kind of just touched on this, but again, really going back to, what are the priorities and what are the key things around your payments and that are going to keep your business operating. I think first and foremost, we always go to wages, especially in the construction business. We need labor a lot of the times to execute and, the projects that you're doing. So making sure that, we can continue to pay our employees so they can continue to work for us is usually priority number one. And then that moves down to your key suppliers. So again, what materials do you need to execute the jobs that you're currently working on? Again, if you have future projects that are, looking very likely to go ahead to, what are we doing to make sure that those suppliers are kept happy through a payment plan that you're looking to work on? And obviously insurance and bonding is necessary for you to even walk out the door to go to work. So just making sure that those three key areas are prioritized when it comes to actually paying out. And then obviously, secondly is, you want to, prioritize the payments and the debts that you've guaranteed personally. And again, the Canadian Revenue Agency and some of the payments and some of the programs and some of the deadlines, they've been moved back. So again, understanding when those, reallocate some of the money that you would normally put into those areas and put towards more of the wages, key suppliers, and insurance would be a good recommendation. Again, this is a big one that I tend to work with a lot of clients on just day to day, and especially now more than ever is really accelerating receivables and how can you do that. Again, this is kind of like your whole field ticketing or your ticketing process, and really again now it's really moved online. And so it's really about, and again, I know there can be some complications around having people in the office and really having that workflow, at a certain direction, but it's really going to be around, how do we get those invoices out as soon as humanly possible? When do we get them into the hands of our customers, a correct invoice? What are we doing to ensure that, we're following up with them and that we're in constant contact with them and making it as easy as possible for those clients to pay? And in some cases that might be by credit card, or another form of payment. I know there's some associated fees that typically come with that, and I guess that would be kind of a cost benefit analysis versus, do we want to, incur that fee, or do we, want the cash, in our bank as soon as possible? And another, area here, point number two is really around, what can we do to mitigate any risk associated with AR or a job? And sometimes that, could require, a deposit or partial payment, progress billing, certain terms that you could use in order to keep that cash flow coming in a consistent manner. So again, this is, first and foremost is going to, so freezing that non-essential spending and obviously doing that as soon as humanly possible. Again, anything that's not mission critical, anything that, is discretionary in some cases, or doesn't have that return on investment that you think it will have. I would really just take a look at what are the key priorities in taking a look at what cash do we want to spend as outflows that really are part of us executing something that's going to bring revenue and profits and cash back into your business. So prioritizing those expenses that keep you, right here, and then obviously spending and reducing for several months. And this can look at some of you, might have seasonal businesses, where, potentially you're not doing much work from November, December till, let's just say February, March. So you might be already coming in, with cash, cash flow challenges and things like that. So, what does it look like in terms of wrapping up and scaling up your business for the summer? If this is when you're typically looking to really make most of your money. And again, this is kind of going back to what can we do right now to cut and what versus later. And if you can have that cash flow forecast dialed in, you'll start to see the trend. And, some of, like I mentioned before, where you can kind of get the graph looked at and put some base points on there. That's going to tell you, just based on historicals or your sales projections, when you should be injecting, or when if you did cut some spending, or if you did scale down, let's just say labor, or if you scaled down, certain material purchasing. It should show you the variances and how that will affect cash moving forward. So again, folks, I'm just going to move on to the HR side here, but again, just to cap off on the cash flow, really, first and foremost, just get a cash flow template in place, cash flow projection in place. A lot of different tools out there. Like I mentioned, we sent one out, and really just try to get as detailed as you can, highlighting all the inflows and outflows, for at least the next 3 months. And again, that should give you a basis point to start to understand if you are going to have any cash flow challenges, or if you are projecting that you're going to hit the danger zone. Then that's going to essentially be proactive to go try to get maybe a working capital loan, or maybe look for some equity investment or your home bank on some of those issues. And again, just trying to accelerate that AR collection period and the AP. So I hope that made sense. Sorry to run through it so quickly, just trying to be mindful of time here. Moving over to HR, and really, an area that I've been spending a bit of my time on recently is helping folks develop an HR plan. And first and foremost, that's just starting with policies and procedures. And this is really around trying to mitigate the risk around, health and safety with your people, maybe potential legal liabilities and things like that. I know Troy had mentioned a few things, but it could be anywhere policies around, are we having meetings in the morning anymore when we have too many people in the same room? Do we have to have, different lunch schedules? Can we have crews riding in the same trucks? What happens if we're working out of town? Is there hotels and meals, policies that we have to, or, if we are working from home or working remotely, what sort of procedures and workflow do we have to start to consider? So these are mainly just policies and procedures that we want to take a look at. We want to ensure that we have in place, and it's going to mitigate any risks, not only against maybe getting folks sick or things like that, but also some of the procedures that might be affected by the change in how we have to do business. And that really kind of follows down into a communication plan and how you are communicating with your people. Obviously there's some folks that are communicating every day with their team. There's people that are communicating when something changes, or producing memos and policy changes or procedures, or updating on work plans or sales plans. And again, I just like to highlight too that I think one of the things I've seen some folks do that's gotten some good results is really just talking to your people one-on-one as well, whether it's supervisors to employees or management to employees or whatnot, but really just checking in on your people, making sure that they're doing good, from a mental perspective as well. These are some tough times on a lot of people, and obviously if people are home or work's drying up and things like that, there's quite a few things that could be running through some people's heads, and some people are obviously in different financial positions than others. So again, I just recommend talking to your people as much as you can. I think it's, you know, in these kind of crisis situations, I think it's better to over communicate than under communicate. So again, just communicating with people, whether it's around updates, around them, how they're doing, around policy and procedure changes, around workflow, scheduling, things like that, I think is an important part of an HR plan. Again, going down to reviewing your organizational chart or your staff list is really around taking a look at your staff, taking a look at what the mission critical projects or processes are that's going on right now. Some of the functions within your business that maybe you know, were pretty important when things were up and running in the normal course of business, but now you know they're obviously not able to work from home, or they don't have server network access, or they're not essentially critical to getting that cash coming in. They're more of a support function. Obviously, you could, you know, take a look at a couple different positions within, you know, kind of a standard business, but that would kind of be a case by case basis, as I know in smaller to medium sized business, you get folks that wear more than one hat. So really, it's around trying to understand, you know, who are we going to retain, who might you lay off temporarily, and who might you know, terminate, and really just trying to be conscious of some of the government programs and things like that that are out there. And again, that kind of ties into your utilization, your workflow capacity planning. Where really you're taking a look at, you know, what is the labor and staff and requirements that you need to execute and to get the things done that you want to get done. And again, you know, I do know that I've had some clients in the past that, you know, might not have had, you know, the workflow or the utilization of a particular employee to maybe justify, you know, maybe keeping them on board, but they've recognized, and maybe due to their cash position, their ability to maybe weather the storm, as they've been keeping some people in place, but just repurposing their time to, you know, working on their business a little bit more. And I think we can all appreciate when times are really, really busy, you know, it can, some of the on the business activities or some of the special projects that you've been doing to maybe make more, you know, be more efficient in the past have never, you know, got done. So that, you know, this is a time, like, you know, a lot of politicians will say, you know, don't let a slow time or recession go to waste. So maybe, you know, there is some thought to hear, if you do have the ability to keep some staff on, is what can you do to make them productive, or at least, you know, have, you know, them working on some things that might make you, you know, a better business when this gets back to normal. And again, the last point I have here, folks, is just really be prepared to make hard decisions and to make them fast. Again, if you have a sales projection tool, if you have a good idea from your operational impact controls, and you have your forecast out, as you're updating that, and as things start to change, or as things start to come into play, whether it's going down to essential services, you know, going black, or, you know, going right back into the full swing of business, I think this is, you know, just being proactive and making those decisions would be really recommended. And so with that being said, thank you very much, everybody, for your time here. Sorry I ran through that pretty quickly. I know there's a few other people to speak here, and if you have any questions on anything, please don't hesitate to reach out. And again, thank you, Brian, and your team for giving us the opportunity here.
Troy, thanks for your presentation. I'm gonna switch the control over to Dylan Hughes here in just a second, if my computer catches up with me. And while that is happening, just a brief introduction. For those of you who weren't at the last forum, Dylan Hughes is a partner in MNP's tax services. He works closely with the real estate construction and private enterprise groups in Calgary. He delivers specialty tax services, including corporate reorganization, succession, estate planning, and family trusts, development of new domestic tax planning ideas and structures, as well as income tax planning. Dylan, welcome back. And we look forward to hearing your update on the Canada Emergency Response benefits and whatever else you might have to share with us this morning. Over to you, Dylan.
Good morning, everybody. I just shared my screen. I hope you guys can all see that. And it's just the first slide here is on the Canadian Emergency Wage Subsidy, which is essentially what we spent a bunch of time chatting about last time. I think that at our last session, we hadn't received the final legislation on this program yet, and since then we have. So I'm also thinking that since that was a early part of last week, that most folks have had a chance to look at this and probably have like a lot of more detailed questions, which is excellent. I already saw in the chat there's a question, well, for home builders in particular, does this wage subsidy program that's been rolled out, does it apply to commission salespeople? And the answer is, quick answer is, well, yes, but it's going to be a little bit more complicated to figure out exactly how much you might be eligible for. Okay, so I actually have a slide on that here in the deck, so I'll come back to that and we'll talk about it in a bit more detail. But the quick answer is yes, for those of you who are wondering. So I'm not going to spend a lot of time talking about that emergency response benefit. That's the expansion of the EI program. I'm just going to talk a little bit more about this wage subsidy program, and we'll go from there. So this is the 75% subsidy up to $58,700 of normal earnings of your employees. Let me just see here. How do I advance my slides? There we go. So when they put this legislation out, they put about 5 different key criteria that all have to be met in order for you to receive this subsidy. It's easy to gloss over some of these things, but in some cases it could mean the difference between being eligible or not. So I don't have a ton of time today, so I'm going to blast through some of these definitions, and if you have some questions that are really particular to your situation, you can always reach out. So eligible employee is the first thing that you need to know, and that's an individual employed by your eligible entity which hasn't been without pay for more than 14 days. So that's somebody who's working for you or is on paid leave. And eligible entities pretty much includes any type of business. I won't get into that, but that's helpful that they did not restrict eligibility based on what type of entity you are. This wage subsidy is determined by a formula, but in essence, the subsidy amount is the greater of the least of 2 different things. And in essence, that's 75% of the actual amount that you paid your employees during this period, up to a maximum of $847 per week, with a special rule for parties that deal at arm's length, or sorry, parties that deal not at arm's length, being owners and management in particular. So let's work through this. Let's say you had a commission salesperson who you know, was making money in January or February of this year. Okay, let's just say that it happens to work out. I know this is a bit imaginary, but let's just say that it happens to have worked out. They had about $2,000 a week in average commission. So what you would probably do here is you actually need to first calculate what the baseline pay was for that person. And that baseline is based on the period of January 1st to March 15th. So you can kind of average what commissions they did earn or what salary was paid to a non-commissioned person and figure out what their baseline was per week for that period. Because that becomes one of the limiting factors. In the bottom part of that formula, the least of 75% of your baseline, you need to kind of know the baseline pay for every single person on your payroll if you're going to continue to make payments under this program. And so you should go ahead and calculate that, and you cannot get a benefit of greater than 75% of that baseline. So in the event that somebody was making less than that in that base period, there may be a maximum that applies to them that doesn't apply to other people. Now, I don't know if you're going to necessarily pay commissions out during this period, depending whether or not there are sales sufficient to do so. But in any event, commission salespeople do apply, and all these rules apply to basically any type of remuneration that you would otherwise have to normally make withholdings on, with a few minor exceptions. So there's a sample calculation of how that is calculated, but I've seen lots of spreadsheets out there on this, lots and lots of spreadsheets on this, and most of them have been pretty good, but it does become a bit formulaic at the end of it all. So just point out that it's worth spending some time looking at that, and maybe also having your accountant or in-house accountant take a second look at whatever you guys are putting together. That's what I've found. I've worked with a lot of my clients over the past week, kind of refining their calculations on whether or not they qualify in the first place, and then if they do, how to actually pay it out, and it's on a per employee basis. So it can get pretty granular, and it's probably a good idea to spend some time doing that if you haven't already. So our eligible remuneration, just to be clear, that includes salary, wages, commissions, and has to be paid in respect to the week in the qualifying period. There you go. So paying a previously booked bonus, for instance, is not going to be eligible. And this is stuff that's going to be paid between March 15th and June 6th. Does not include dividends, severance, and stock options. Doesn't include any amount that you could be reasonably expected to repay. I'm not really sure what, I mean, I know what this is getting at, but I don't know who's going to overpay employees right now to, and then have them promise to make repayments. I just be aware that there's sort of anti-avoidance rules of that nature, though. It doesn't include anything that is paid if it exceeds the baseline. So obviously you can't top people up to more than what they were making before. But will lead to some interesting situations where you have commissioned people whose income is like lumpier. So you will have to do that baseline calculation for that period for those people and see how it turns out. And they might have a different answer for one commissioned person as compared to another. Yeah, cannot temporarily bump the pay that you're making to people, staff, to maximize payments under this program. I will just like to point out that non-arm's length thing just one more time. So there is a special rule for non-arm's length people. It's just that it's we were kind of wondering about this on our last call, but they gave us clarity, and here's the clarity. There is a special rule for non-arm's length payments to owners and things of that nature. You have to have basically been on payroll for that baseline period of Jan 1 to March 15th in order to be eligible. If you or a non-arm's length person or family member was not on payroll during that period, the formulas that I just showed you will calculate a wage subsidy of 0. If you were on payroll for that period, you have to figure out what your average weekly pay was for that non-arm's length person. And then only that is going to be what the maximum amount eligible is, up to that 847. So very, very, very important to carefully look at that in the case of non-arm's length people. Again, here's I have way too many slides here to do justice on in the time that I have, but here's some more information for you on the eligible remuneration. I think I just covered that. I also wanted to address this refund of payroll contributions, so that is CPP and EI. So just for clarity for anybody who's wondering, there is a newly announced refund of CPP and EI, but this is only a refund that's available for employer paid contributions for those employees that are on leave with pay. So this wouldn't apply to the employees that you have that are still working. So there's been some questions on, well, what does that mean? Like, how much work do they have to do or not do? And I've just said, well, it's pretty clear. Like, if you've got somebody on leave without pay, that's different than if you've got somebody doing 4 hours a week worth of work. But it's only about you'll only be eligible for this refund for those folks that are truly on leave. It's also important to be careful about the periods for which you're looking at. There's 3 periods. We're already through the first one, and as you all heard in the news, I'm sure the reduction in revenue for the period number 1 was reduced from 30% reduction in revenue down to 15. And just for clarity, that used to be March over March. Now it's that March over March, or the average of January or February. And you're also allowed to use the cash method of accounting. Okay, so I know most businesses keep good cash flow statements and stuff like that, but you will need to figure out how to run those cash-based income reports to see if you don't otherwise qualify under your regular accounting methods, which I assume some builders and contractors may not, for reasons we discussed last time. You may want to look at this on a cash-only basis, and you have to basically follow the same rules that farmers follow. Farmers, of course, report their tax on a cash basis, so they already have a system for doing that. So interestingly, yeah, your cash income, I guess, for instance, if you were a home builder and you had a customer that got the keys on March 30th and transferred funds into your trust account, and you didn't get the money till April, that would count as a March cash flow because it went into trust. So same deal on contracts. When the check is written and received, that's cash received. So some interesting things here. If you come very close to the line on any of these tests, it's worth looking at very, very, very closely. And then I also wanted to point out that bottom bullet, that once you're eligible for one specific period, you're automatically qualified for the next period. So if you qualify for March, you're automatically qualified for April. You have to retest in May based on the rules that are in the screen in front of you. So like I mentioned, January and February average revenue can be used, but if you go ahead and do that, you have to continue to use that method for the entire duration of the program. And also just wanted to touch a little bit more on the revenue criteria. This is revenue determined in accordance with your normal accounting practices. So I've spent a bunch of time in the last week talking to people, well, what's normal accounting for this type of revenue? And what about this item or that item? So there's some really, really interesting questions that have come out of all this. And the truth is that they essentially gave us a new definition of revenue for the purposes of these rules. And we kind of have to go with that. There's also some rules that were put in place for entities that have all or substantially all of our revenue from non-arm's length parties. And in fact, those entities could qualify. So if you had a payroll company or one company in a corporate group that was doing all of the payroll for all of the companies, there are special rules to deal with those situations. In the link that we have to talk today, I cannot go into that, but I would highly urge you, if you're in that situation, absolutely reach out to your advisor to go through it with you. But there are provisions to allow for those types of situations to basically, you're not going to be ruled out of having access to the program. I also just wanted to point out, and as it relates to these revenue tests, they've just made it a hard stop. In other words, if your revenue declined 84.9 does not equal 85 is in my slide. In other words, it's an all or nothing test. If your revenue has gone down more than 15% in the first period, you're qualifying. And if it only went down 14.9%, you do not qualify. So I've been encouraging people to run those calculations and see how close they really are before delving into the gory detail. And I will point out that once you decide on whatever method you're going to use to figure out your eligibility for this program, you're stuck with it for the entire length of the program. So it would be perfect if you could just kind of come back in later and see, you know, with the benefit of hindsight, which method are we going to qualify for more periods under, but that's not going to be possible. If you want to apply, you're going to have to do it soon, and you're going to be stuck with whatever method you choose at the outset. So think about that carefully, but there's a little bit of an element of you're just not going to know. And in terms of how to apply, just reminding people again that this is going to be done through the My Business Account portal as well as a web-based application. So I've been taking that to say, just get your My Business Account set up anyways. I'm not really sure if it'll be necessary, but it seems like it will be. So everybody I've dealt with, we're in the process of getting that if they don't already have it. And just make sure you keep good records demonstrating the reduction in revenues in particular, because when this comes around to being audited a year from now, you know, it's going to be hard to get in the mindset of what we were thinking today in terms of qualifications. So make sure you put a good file together on this as a risk reduction strategy. There's going to be an attestation in this application. Your accountants aren't going to be able to do it on your behalf, even if they are able to access your account through the represent a client function in CRA's website. You're going to have to do it yourself, the business owner or management. And of course, government does want people, employers, to continue paying the baseline remuneration if at all possible. And to note, whatever subsidy you get is included in taxable income. The compliance and penalties part of this, I'll just touch on briefly. If you turn out to be ineligible, you have to repay all of the benefit received. And if somebody does something artificial to reduce revenues or otherwise become eligible for this program when you're not supposed to be, there's 25% penalties on top of the repayment that could come into place. And of course, I will note that by applying for this program, you give the government permission to make information relating to your application public. So that's never before seen in the Canadian tax landscape, as far as I know, in the entire history of income tax, where they've put a public, we'll call it the shaming rule. Doubt they'll use that, but it's kind of scary, and I don't know why they felt that they needed to do that. Very, very different from anything I've ever seen. I would love to get into these other programs. I've got a whole slide deck on this that I could spend an hour on, but we'll probably leave it at that, and then I'll just make myself available for any questions that you might have. So I don't know if Brian, if you'd like to moderate the questions, or if I should just perhaps just take a look through with what we have
Sure,
here.
Dylan, I'll if you like, I will moderate the questions. I think the first kind of set of questions that we had were with respect to commissions, which I think you covered off pretty well. There's one that came in afterwards that I'll just go through, and it says, our commissions are expensed at the time of sale but paid at different times during the construction and at possession. As the expense may have been recorded before a particular payment, would that payment, say at possession rather, still be eligible?
Okay, I have to be honest, I don't know the answer to that off the top of my head. Although I understand the accounting for commissions and how it's kind of a little bit different for a lot of builders. And I know that, as far as I understand, it only gets paid when the deal actually goes through. So I think from my recollection of dealing with this, that's generally viewed as it's not, it truly is contingent until the very last minute, until the customer takes possession of that home. So I would think that you could make the argument that it's really not earned until paid, regardless of whatever fancy accounting you may be doing in the background. But I would just want to check that against the rules to be sure. That's an excellent question, but again, I think if you do, unless there's some element of certainty around it, I think there's always a bit of contingency around commission payments until the deal goes through. So I bet it's really not earned until it's actually paid. So if somebody sold a house in December and then it closed, took possession in February, I believe that would be February. But again, I'd just like to say that maybe we can touch base after the fact if you want to talk more about that.
Thanks, Dylan. The next question is there any word on allowing construction and or mining companies to use sales rather than cash revenue to prove a decline? The time delay between sales and revenue is going to disqualify a lot of companies. And I think this has been turning around, and you may have addressed it in part in your presentation, but maybe just go right specifically to that if you could, Dylan.
Absolutely. So this is where the rubber hits the road. Like I mentioned, the revenue for this purpose of this program is not actually traditional accounting revenue. They've actually made their own definition, and I don't have it in front of my face here, but it goes something along the lines of the inflow of cash, receivables, or other consideration that would arise in the ordinary course of business. And so because that's not defined, you really have to ask yourself, what is the ordinary course of business? How would you ordinarily account for your income? And then when it comes to the cash method, though, because remember, we can use the cash method to determine whether or not you've had a revenue drop. The cash method, those rules are actually also well defined, but it's actually a lot simpler. It's cash in the door and top line cash in the door. So I think that on the basis of that cash decline, a lot of those companies, you might be eligible anyways, but again, it totally depends on the timing of cash received under the rules and under your contracts. So no, there's no real specific rules for construction or mining, but I think you might be able to use the existing rules, but you really got to look closely.
Thanks, Dylan. I think we might have kind of petered out of questions, and I think some of our participants have actually had to move on as much of the rest of us do. But I'll just make one last call for any questions. If there is, I think there's one here that was just sent to me. Stuart Craven has asked me, what is the industry doing to help builders qualify? So most of what Build and our sister organizations, both Build Alberta and the Canadian Home Builders Association Ottawa, have been lobbying those two orders of government. Canadian home builders have been in contact with the federal government on a number of fronts to help make the rules work for the home building industry. And I know Kath Cook was on a call last Friday. And Kath, if I might just call on you if you had any update for the call just before the weekend.
Sorry, it just took a minute to get my mic going. What they're looking for is always specific examples to go back to the government if people are having issues accessing things. I had one member contact me about a lot of work they'd gone through to apply for an already in place subsidy, which was the Workshare program. It takes a lot of time and energy to build that, and you want to get feedback soon if it's going to be eligible, if you're going to be eligible for it. And they were not hearing back from the government. And CHBA just always wants to hear from people if there's specific things that people are trying to do and the government is not reacting. So if you have anything, just reach out to me and I'll communicate it back to them. Thanks.
Hopefully that answers that question. And if not, the person who asked that, Stuart, you are welcome to contact me directly by email. I think there's a question from Crestview Floors. It says, commissions are calculated and expensed in the month the job is costed and paid to the salesperson in the next month. So I don't know if there's a specific question in that, but Dylan, just before we sign off, do you have any comment on that about how that one would work, or is it any different than the answer you gave before?
Yeah, I don't think I have anything else to add there. I think it's going to come down to whether it was earned in the qualifying period, and if you pay it out the following month from which it was earned, you just need to look at which month it was earned. Again, I would urge you to really look at the rules closely on that, or talk to your advisor in that, because that's very specific to exactly how you do it.
Thanks, Dylan. So I think the questions are kind of drawing to a close here. So what I'm going to do is just advise everyone that the presentation materials, I think there's some question on that, and including the part I hope that you weren't able to get to, are going to be posted on the portion of our website that has been developed for the crisis. And I'm going to thank our speakers, Dylan, Jory, and Troy. Thank you for making time for us this morning. I note that at our peak, we had the better part of 150 people connected on this, which is a very impressive meeting for a Monday morning. So thank you all very much. And thanks to the Build team for organizing this. And to the extent there are further developments, we will keep you posted and perhaps have another one of these a couple of weeks down the road. So thanks everyone for your attendance this morning. Very grateful for your contributions. We wish you the best.